We're 2 hours into trading. It is Tuesday, September 21st. Hello, traders. We've had some exciting market conditions to deal with. Let's take a look at yesterday's pick, then let's get on with the market, see what we've got. MS, Morgan Stanley, was a short that I highlighted yesterday. Like that technical breakdown, it did find support. You can see how it leaked lower later in the day and then bounced with the market. That was quite a market bounce that we saw yesterday. Look at this relative weakness. The stock is trying to get above that high price from yesterday, but it has not been able to. I still think that banks are going to struggle. We'll take a look at the D1 chart. You can see the breakdown below the 50-day moving average, horizontal support breached. We have a long-term uptrend coming into play around that 100-day moving average. If the credit crisis in China continues to escalate, then we will see banks take a hit. Now, what about that? What about Evergrande? What's going on there? Well, they have an interest payment that's coming due Thursday, so that's really when the rubber is going to hit the road. And China has said that they are going to inject liquidity into their financial system if they feel the need. So they are not going to bail out this real estate giant. The question looms, are there more Evergrandes out there? What's going to be happening in China? Is this the first crack in the dam? And I find it a little bit amusing because I went back and I took a look at articles from 2007 regarding Countrywide. Lots of analysts going, they got out over their skis. This is a one-off. This is all subprime mortgage. In fact, this is going to be great for Wells Fargo because they're going to pick up so much market share. So we're hearing the same types of things right now. The market is discounting the significance of Evergrande, and we don't know if there are going to be other issues looming. So what can we use to pick up on those clues? Well, the one thing that I've been mentioning in my videos for a very long time is the Chinese market. That's the high from this year, and you can see what the Chinese market has done through the course of the last 8 months or so. So this is not just Evergrande news that's causing this sell-off in here. This sell-off has been happening for many, many months. This tells me that investors that have boots on the ground in China, they see problems. And that's why we use technicals. I don't use fundamental analysis where you get all sorts of fluffy news items that come out and everything's going to be fine. Oh, this is going to be a buying opportunity, everybody. That's not what the price is telling me, and that's not what the big money is telling me. The big money is heading for the exits. You can pick that up in technicals. You can't pick that up by reading headlines. So I suspect that this could turn into a bigger problem. So I'd be very, very cautious, and you're going to see follow-through selling if investors in the US feel the same way. So we go into the daily chart of the S&P 500 and we see what's going on here. Now you can see that very, very strong upward sloping trend line, but we've broken through that trend line to the downside. We put up the major moving averages, the 200, the 100 was actually tested yesterday. It's been a long time since we've tested that 100-day moving average. We'd have to go all the way back to about a year ago to find that test. So in a year, we haven't seen anything like that. September is a weak month. We have seasonal weakness working against the market right now as well. This selling pressure is very telling to me. I've been highlighting this in my videos as well. You can see the steady downtrend. You can see how the market's had a tendency to open on the high, close on the low, open on the high, close on the low. That's why we have red bars. We have not seen this type of persistent selling for many, many months. It's been the 3 steps back, off to the races, 3 steps back, off to the races. Every one of these dips, very, very short-lived, and that speaks to the buying pressure that we're seeing and to the strength of the market bid. Well, this time is different. You can see downward sloping trend line, connect the lows. Yes, we had a breakdown below it. We're off of a major moving average. We're getting a little bit of a bounce, tails under body. Typically, this type of move to a major moving average would have skyrocketed us to a new all-time high. But now I believe that because of this selling pressure, this is going to be a little bit of a bottoming process at very least. Okay, at very least, there will be a bottoming process where we float up a little bit, then we get another wave of selling pressure, and we confirm that support, much like what happened here, except this example unfolded in a week. This one may take 3-4 weeks to unfold. We've got the debt ceiling coming up. Politicians need to extend the resolution by September 30th or we run out of money. They're going to drag their heels. They'll probably get a deal done at the very last second. The market won't care until that deadline has been reached. That's when politicians seem to get things done. We also have the FOMC meeting tomorrow. Now, everyone's looking for dovish statement tomorrow because the Fed knows that Evergrande is a big issue if there are credit concerns rising in China. So they're going to maintain their loose monetary policy. But during the last FOMC meeting that we had, which is 2 months ago, we heard that there were Fed officials who wanted to start talking about tapering. We may hear that again tomorrow, at least put out some type of timeline. If it's anything within the next 3 to 4 months, the market is not going to like that news, especially not with some possible credit issues looming. So we've got major news right now. The FOMC statement has been dovish for years. That loose monetary policy is going to continue. I think that that's what's kind of keeping the market afloat in here. We could come in and maybe fill in a little bit of that gap heading into that FOMC statement, but traders are going to keep their bets very small because there's a lot of risk right now. You don't want to be taking big positions ahead of major news like that. And that's actually bearing out in the price action today as well. Context. I've spent an incredible amount of time talking about context the last month. What is the context right now? I've told you that we've seen heavier selling pressure right now than we've seen in many months. We've also tested the major moving average, the 100-day moving average. Haven't done that in a year. And yesterday, when I posted my video, I had mentioned to you we had this big gap down, hardly any bounce at all, tiny little green candles, and then here come the sellers right away. This was a sign that we were not going to fill in that gap and that the selling pressure was steady. In yesterday's video, please confirm this. Don't take my word for it. Don't trust that what I tell you is true. Go back and watch the video yourself. I'd mentioned to you, market is not able to get off the deck right here. I see that as bearish. We had a big drop. It's going to take time for the losses to be digested before we get another wave of selling. This is a beautiful 10p bearish cross. I believe that we're going to take out the low of the day and then we'll see another wave of selling. That's exactly what happened. Yesterday, I also mentioned that because of the depth of this drop and the persistent selling, we were likely to see a bearish divergence. Typically, when 10p goes up, the market goes up. When 10p goes up and the market is flat to lower, that is a bearish divergence, and it confirms, right here, confirms the trend strength to the downside. So you want to stay short. So we get that next bearish cross in here. Everything's all good. Now we get a big time bullish cross right in here late in the day. How do you trade that? Well, after steady, persistent selling, and I'd mentioned this, I believe in the video, for sure in my chat room, we were not going to see a meaningful bounce until very, very late in the day, probably the last half hour of trading. So you would draw your downward sloping trend line like this. You would wait for technical confirmation before taking a long position in SPY based on a bullish 10p cross. Two long green candles closing on their high, very little overlap through that downward sloping trend line. Yes, this would be a good position, good entry point for a long position into the close, and then we're off to the races. Big gap up today. So what do I see happening today? Well, first of all, it was kind of a curious situation when we rang the opening bell today because we had a situation where no matter what the market would do from here, we were going to be filling in a gap. If we went higher, we were going to be filling in this gap. If we went lower, we're going to be filling in this gap. So I can't recall seeing that recently, but it was kind of interesting. Well, we have a long green candle here, and then it is engulfed by these two red candles instantly. So any notion that we are going to run and fill in that gap right away was dispelled. Plus, we had a nice 10p bearish cross right in here. Got your new low of the day. I took a short here, took a 13-point profit in the S&P futures, then I went to the sidelines. Why? First of all, because I could tell the price action was very choppy. Well, how do you know that? Well, I know that because yesterday we sold off hard and then we had a 40-point rally into the close. That doesn't happen when you have one-sided bearish price action. You would never get a release like that. Second of all, we come in to trading today, and we've got mixed candles in both directions. So we get that nice little sell-off, and then instantly we start to see support forming in here with mixed candles while this 10p indicator is dropping. So I was quick to take profits in here. I was happy with the gains. Now we get a bullish cross in here. To this point, all the candles that were long had been red, with the exception of that one. So that favors the short side. So everything looks like it's just kind of finding support here. We're able to hold the losses from that red candle, and then blam, out of nowhere, we get a long green candle. And another long green candle. Well, that's where we sit right now. Context. Long red candles, long green candles. Make a big move, do nothing, big move, do nothing, big move. Same here. So choppy, noisy. Just as I had mentioned earlier, we are on the eve of an FOMC statement. That tells me we are dead till the Fed. That is context. So if you're a day trader and you're trying to make sense of all this and you come in early in the day and you see a gap here and you see a gap here, that tells me we could go either way. Keep your bets small. Yes, you can certainly lean on that 10p indicator, but keep your bets small. Set passive targets, take them when they present themselves, wait for the next opportunity. Now, this was beautiful, all great, no problem. I'm sidelined. Now, when I start to see this and I see this, I know we're going to be all over the board today. And it's just going to be choppy. We're probably, my gut tells me that high and that low might be the range for the day. We'll see. We'll see what happens. Context. So, what happens after tomorrow? I don't know. Go into that daily chart, but I can tell you that the Fed is likely to make dovish statement in terms of long-term interest rates, but I do believe that they're probably going to start mentioning some type of timetable for tapering. I don't think the market's going to like that in particular. It'll get through the news. Thursday, Evergrande defaulting, China's reaction, that will be big. China's market's currently closed, so it's not impacting trading right now. I am going off of this steady selling pressure. This is what's telling me to be very cautious with longs right now. And yes, we bounced nicely off that 100-day moving average, but after a heavy dose of selling like this, buyers are not going to be aggressive. Well, how the heck can you predict that, Pete? Honestly. Well, because you take a look at this chart, and if you're a buyer, big asset manager, and you start to see selling pressure like this, do you think that there's not going to be another opportunity to buy stocks when the forward PE of the S&P 500 has not been this high since the tech bubble of 2000? Of course you're not in a hurry. You're going to wait and see what happens in here. What's going to happen with interest rates? What's the Fed going to say? What is China going to do? So I don't think we're going to see a gangbuster rally back up to the all-time high, at least not until we rally, maybe fill in that gap, come down, test the 100-day moving average, another week, 2 weeks, 3 weeks for all of this to kind of play out, the dust settle. Then I think we'll know one way or the other whether we have some serious problems in China or whether we have a nice year-end rally back up to the all-time high. So watch your price action in here. I don't really have any feel of what the market's going to do today. And if I don't have a feel, I'm going to be honest with you. I don't know. My feel for the market today is it's going to be choppy. My feel for the market today is that traders are going to be passive because they're going to stay on the sidelines ahead of major news. So we'll see some buying come in, we'll see some selling come in, and your focus should simply be to try and catch some day trades on stocks with relative strength or relative weakness. So I'm going to go in and I have a slightly negative bias based on the price action the last 2 weeks. So I'm going to stick with the bearish side. We'll see if we can find some decent stocks that might set up well for a short. Upward sloping trend line, breach to the downside, long red candles, below the 200-day moving average, below the 50-day moving average, 100-day moving average in striking distance, DKNG, relative weakness. You can see that heavy selling. Now you've got a nice little bounce. What do you do with that? Click my alert line. Click that alert line. Now I'll know if the stock is rolling over and breaching that upward trend line and ready to resume its sell-off. DKNG looks pretty dang good. AA, decent chart here. This is a bearish engulfing candle. It's engulfing this candle right here. It's been nice. It's been pushing higher and higher. That's good. Upward sloping trend line, breach to the downside. Longer term trend line still intact, but probably being tested in here. Not my favorite short. ATVI, nasty. Big downtrend here. Horizontal support breached. Relative weakness today. Yes, this stock looks good for shorting. I like this one. What do I do with this? Click alert, double click on that. Okay, I'm going to know if there's a new low of the day. How do I confirm that there's relative weakness? Put up the 1 OSI indicator. Yep, orange line below zero, relative weakness. You can see how the stock has been drifting lower. Here's the tell. Nice market bounce. Stock not able to bounce at all on its low of the day. ATVI, very nice. Not much going on there. X also finding support, US Steel, but a little bit of a nasty daily chart here. You can see though that the stock has a bearish engulfing candle below the 200-day moving average, testing that horizontal support. So this could be a good short, but I would hope to see better than this chop in here. ATVI just made a new low of the day. That's how the alerts come in. There's your new low of the day, the one that I just set. So I think that that one sets up well. RAD, love it. Good short. Oh yeah. Look at that. Nice downward sloping trend line. Breaches the 100-day. Breached the 50-day. Long red candles stacked with very little overlap. Upward sloping trend line. Breached to the downside. RAD is a nice short. CLF, little bounce in there. Been hit hard just like US Steel. 200-day moving average in the way. There's no short for me here. So, ooh, that's not too bad. Nice little breakdown there. Downward sloping trend line. Let's take a look at this. And you can see fairly choppy stock in here, but you can see that it is trending lower, fairly cheap stock. Out of the ones, just a handful that I picked off of one search, which is heavy selling. I like RAD, that's a good short. I like ATV, I think that sets up well for a short. And DKNG also looks like a good short if that upward sloping trend line is breached and we need to get that 1 OSI indicator, relative weakness indicator, back below zero. Those would be things that I'd be looking for. And market first, market first, market first. Let's make sure that this upward sloping trend line is breached. Let's make sure that we have a bearish 1OP cross. So here's the hierarchy of the trade. Upward sloping trend line, SPY, breach to the downside. Nowhere near the high of the day, so looks like this could be a good sell signal. Bearish 1OP cross. I get these elements in here. It tells me I should be looking for shorts. I'm looking for short trades. Go into DKNG. Upward sloping trend line still intact. No go. ATVI making a new low of the day. This is where I'm going to be looking for my short. You can see the relative weakness, orange line right there. RAD on the low of the day. Steady selling pressure. No bounce with the market. Relative weakness. Another good short. Wait for that breach of the SPY upward sloping trend line. Wait for that 1OP bearish cross. RAD, ATVI. Those are shorts I'd be taking. That's all I've got for you today. Please leave your comments. Good luck with your trading. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.